Testing, testing, testing. 1, 2. How's everybody doing? Oh man, had a little bit more time to digest. I think the market's digesting the Warsh news. Also, another coin from Trump. We're going to talk about that and what that means. And maybe it's not a big deal, actually, after reading into it a little bit. Markets are rallying a little bit. I think we could make the argument there's maybe a little bit of an overcorrection to the Warsh news. I'm actually in the session today going to talk about the bull case and how I think this actually could play out. And we're going to talk about the ISM manufacturing index and some news around that. Should we be as bullish as the numbers suggest? We'll see. We'll see. Hopefully everyone's having a fantastic day. Man, I'm still in St. Louis. I'm heading back to Chicago tomorrow. It is thawing out. It is 50 degrees today. It is beautiful. It's like t-shirt weather now. After the cold weather we've been having, man, it has just been disgusting. So it's nice that things are starting to warm up a little bit. Of course, the news of the day. We had the ISM manufacturing numbers come in, and you guys probably have seen Raoul Pal talk about this, right? That expansion is going to lead to Bitcoin going off. That's the whole thesis behind his whole 5-year market cycle. And the 4-year market cycle is broken. We saw that these numbers came in. ISM manufacturing came in 52.6, the highest in the last 40 months. So we are seeing things expand a little bit. Good sign, I'll say. I'm not going to say it's a bad sign. This is definitely a good sign. It's been a number of years, and we've seen with every other market cycle, we've seen this expand above 50. 50, if you're above 50, that would mean that you are in expansionary territory. It's a good thing. Okay, it means the economy is growing. It's a good sign. This is what I'm talking about here with Raoul Pal. I'm going to play. It's only a 30-second clip. He's talked about this quite a bit, but he's put a lot of emphasis on this metric in particular.
And we know that the TGA is going to be drained, and the QT is going to finish, and the Chinese are increasing their balance sheet, and we got regulatory changes coming, and we got rate cuts coming, blah, 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 blah. And the ISM, the business cycle, follows that. So the next thing for the business cycle is to go higher. Business cycle going higher means we'll have money in our pockets. It goes into risk assets, and that increases the price of crypto. It's not that complicated, but nobody wants to believe it because you're looking at 5-minute charts and scratching your nuts, wondering what's going on.
Wow, look at that 5-minute charts and scratching our nuts. Look, he's been talking about this. I have to say he's been consistent. And at some point when the market does take off, Raoul Pal is going to be laughing at everyone. He's going to be right at some point. Now, we did see finally this break above 50. But I will say, on the other end of the spectrum, we saw Benjamin Cohen, who's been very accurate, okay, in fairness. And I think we have to give him some respect here. He did point out some times where in a midterm year, we didn't see Bitcoin appreciate after seeing us in an expansionary period. Granted, I will say that, the ones that he used, 2014, okay, we are in a very different state today than we were back then. But he did, call out one in 2015 as well. I've seen some people go back and forth with him on this, okay? I don't think, and again, Benjamin Cohen, he has been very spot on. He kind of pokes fun at this. He's like, everyone last year, if you guys remember, it's the M2. It was tracking the money supply, and then that broke, and everyone's like, okay, well, now we're just going to go to the ISM. And it is kind of funny. People, they want to be bullish, and they're going to find data points that will match that thesis, of course. That said, I think we also need to take into consideration this number that came in, and is it all that it's chalked up to be? And this is a Reuters article talking about how it is the highest we've seen since August 2022. New orders sub-index jumped to 57.1. Employment contraction slows. That said, there is a little bit of skepticism on this, and I think we need to see multiple months where we are above 50 to really buy in. Says that respondents, and part of this is just survey data that goes into this calculation, says that the respondents were markedly more downbeat than optimistic. Okay, and they cited tariffs. In fact, there's a post that I saw earlier. I think this does a good job of highlighting some of those quotes. So some of the things that were said, a transportation equipment respondent said that strategy setting has been reduced to hope that the second half of 2026 brings a turnaround. Okay, that's not super optimistic, right? Machinery company says the recent European tariff threat risk is a huge negative impact on our profit for current quoted orders. Geopolitical tensions are fueling anti-American buyer sentiment. Sales are being lost. Okay, food and beverage industry respondent says data center and energy construction is straining the contract labor availability. Confused and uninformed tariff policies continue to plague small companies. So while the number did show higher, okay, and it's above 50, and that's great, the survey data and the respondents, there's a lot of hope that things turn around. There's a lot of talk about concern over tariffs, concern over uncertainty. The other thing is there's a lot of orders that were placed to start the year. And one of the major factors that goes into this, this measure is new orders. Okay, it's a decent portion of the number, and they're saying it might be skewed coming out of the holidays into the new year. So I don't think we can. I mean, not to say not to be a Debbie Downer. I think it's good. Okay, it's good that we saw this number above 50, but I think we need to see this on a consistent basis before we can really take this and run with it. So when you dig into it a little bit, it's not as peachy as some people are making it out to be. Okay, but it's something we'll absolutely be keeping a close eye on. Okay, I want to talk a little bit about Warsh. I brought him up yesterday. I was on a stream. This is something that I tracked for multiple months, and frankly, he was the last person that we wanted. Certainly not the most bullish choice. Okay, for crypto especially. Some of the things I talked about yesterday, just to kind of give you some highlights, and then I want to talk about how I think this actually could play out and why I think the markets maybe overreacted a bit. He's not a crypto bull. Okay, he's come out and said, like, if the price of Bitcoin's going up, that means that the Fed's not doing its job. He's mentioned reducing the balance sheet. Okay, so as opposed to what we've seen during COVID, during 2008 and after, where the Fed, was increasing its balance sheet, basically the Treasury printing money, buying up our own treasuries, he does not believe that is a good policy. He does say when it's necessary and when the economy is strained for going through, a recession or something of that nature, sure, okay, but he believes that we've used it way too much, and I can't disagree with him. Of course, the problem there is that there's the sentiment, and I can't say it's wrong, that markets and asset bubbles and crypto and all of them do a lot better when we're printing money. So if all of a sudden we're changing that, there's obviously concern that a lot of these asset classes are going to underperform and not do as well as they've done. And I think that's why we've seen this big sell-off in markets, especially over the weekend. That said, I want to bring to light some additional thoughts and how I think we could see this play out to where it's maybe not still not as bullish as we could have seen with other candidates, but I don't think it's like scorched earth. Okay, where I think we could still see things do quite well, and actually, I think in the longer term, be more healthy. But I just want to play the end of this clip here, and then we'll digest it a little bit.
Interestingly, if you can have a smaller balance sheet, you can have lower interest rates. Back to you.
How much smaller?
So when I joined, the Fed balance sheet was about $880 billion, included a bunch of foreign currencies. We do need some balance sheet to take to do our underlying business, to help run the treasuries, to help be a good counterparty to the rest of the central banks in the world. The economy's obviously grown since then. I wouldn't want to put a precise number on it, but right now the Fed balance sheet is about $7 trillion. They are participating in almost every banking market, almost every day. The world has come to rely on the central bank's massive imprimatur. I would say it is trillions larger than it needs to be. We can't make this change overnight. But if markets knew that our objective was to get to a balance sheet that was as riskless as possible and as small as possible, and we would get there in due time and with a strategy, I think markets and market participants could well adjust to it. The central bank could then be a powerful central bank, but a more limited one, and I would argue wouldn't find its way in harm's way politically or economically.
Okay. So that's key. He mentioned, and actually, I want to. There wasn't a date stamp on this video, but we can figure out when this was. I believe he said that the balance sheet at the time was $7 trillion. I mean, maybe this was in 2024. The only other time this could have been was right after we did all the printing during COVID. Either way, they asked him, okay, what does that look like? And this is, of course, the Fed balance sheet. Okay, so this is money that we've, these are treasuries we're holding or mortgage-backed securities, and money that we basically pushed into the economy. Okay, so at this point in time when he was in that video, it was $7 trillion. They asked him, okay, well, you want to decrease the balance sheet by how much? He said, and of course, this was he was back in the back in these days, okay, before 2008, before we started quantitative easing, we had 800 billion in assets a long time ago. That's what he started off with. Okay, I was back here in the 800 billion range. He did say the economy's grown. Okay, so it's not reasonable to go back to that. But he said in a basic number, a few trillion less. Okay, so what would that look like? Well, if we're at 7 trillion during that video, that would put us at 4 trillion. We haven't seen that since pre-COVID spending. That was when we were sitting at $4 trillion. And that is the range that he gave there. Now, I think the markets, when I say they overreacted, I think they thought or started pricing in that as soon as he gets in there, he's going to start letting these treasuries run off the balance sheet and restrict cash flow into the economy like crazy. I think there's some key things we need to take into consideration in that video. He said that he thinks this can be done in a way if there's a defined plan, not overnight, but over time. And if the markets understand that that's in the plans, it can be very healthy for treasury rates and for yields. Okay, so what does that mean? Well, of course, he's not going to come in here scorched earth and start just reducing the balance sheet. Okay, I think that's one of the main takeaways here. The other thing is, he said that the market, if they know that's in the plans, that'll be healthy for the bond market. And I agree. I think if we signal that over time, and him and Besson are going to have to work on the communication here, of course, but if he signals that over time, the plan is to reduce the balance sheet to $4 trillion. This is over maybe a 5 or 6 year period. And, the market starts to react to this. I think that people will be more enticed to buy our treasuries if they know that we're not going to continue doing this. Okay. The printing, the crazy printing, which causes inflation. And if you wrap your head around this, if you believe that the Fed is going to continue printing in that manner, that's going to cause crazy inflation. There's just no way around it. Okay. Why would you feel confident in buying a 30-year treasury at, say, 5% if they're going to continue on this path? Right? That's your return needs to outpace inflation. You're going to require a higher yield. You're going to require the government to pay you a higher percentage return if you think they're going to continue on this path. If all of a sudden their goal is to rein this stuff in, I think that you're going to see more buyers enter and start buying up treasuries. The more demand you have on treasuries, the more those yields come down. You look at the 10-year yield, if that starts to come down, that means that people can lend more freely. That means that banks can get access to capital cheaper. They can hire, right? You can stimulate the economy. So that is his plan here. The big question, though, is, will this work out? So we were at 7 trillion there. We've already run off 500 billion. Okay, so we're on our way there. We've started to see this expand a bit under Powell. So who's going to come? Who's going to step in and be the supplementary buyer, to take over? There's a couple of things I want to call out here. Number one, and this is such a big deal, is the stablecoin issuers. So with this Genius Act, it's something that Besant's talked about quite a bit, and something that Russia actually came out. One of the people high up in Russia's government said the U.S. is planning on launching stablecoins to, keep the dollar as the global reserve currency. And he's not wrong. The stablecoin issuers are expected by 2028 to be buying at least $1 trillion annually, because they're going to be T-bills, so a year or less, but it's going to be a regular buyer every year. By 2028, $1 trillion on the low end is what's expected. Besant is saying that by 2030, this could be as much as $3 trillion a year in additional demand. That in and of itself would actually offset that reduction of the balance sheet, the stablecoin issuers alone. Okay, so that is why this Genius Act got so much support from the Republicans and the Democrats, because they realize, hey, we need new buyers to step in and buy our debt to finance our national debt. So that's how big that is. Okay, so that's massive in and of itself. The other big thing we're going to see a lot more of is this SLR change, the supplemental leverage ratio. This is going to allow our banks to buy and hold more treasuries. They've been disincentivized up to this point, past a certain amount. So this change, which they can start to adopt today, as of January 1st, officially is effective on April 1st. This is going to allow our banks to hold more treasuries, and yet another new buyer. And there are some projections that this could allow them to hold as much as $3 trillion in treasuries. So we, in essence, what I think could happen here, and I hope Scott Bessent and him put out messaging around this, and I think they will. I fully expect they will. They want to ease people's concerns on this. Number one, yes, our goal is to reduce the balance sheet so that we're less reliant on the Federal Reserve to, pump markets. Okay, that's not healthy. And long term, it's not healthy. Our goal is over time to reduce the balance sheet. It's not going to happen overnight. This is going to be a multi-year process. But they can point out the fact that foreign entities actually increase their holdings of our debt. We're going to be cutting back spending, so we're not going to be spending as much money. We're going to rein in the annual deficit, and between the SLR change with banking deregulation, with new stablecoin issuers, we'll be able to more than offset that difference in demand for our treasuries. That's going to force down rates over time. It's also going to give Warsh the leeway to cut the Fed rate, okay, the federal funds rate. So on the lower end, the Fed has a lot of control on the short end of the rates. So your 1 year or less are more heavily impacted by the Fed lowering rates. The long term, the market decides. So this is kind of a two-pronged approach. He can lower rates on the short end. He can create demand on the longer end that will bring down rates on the 10-year, 20-year, 30-year rates. Also help the mortgage industry, right, and the real estate. And I think if they communicate it well and they put out a plan, this can work out. This can actually work really well. And as opposed to QE, which is really what's caused this wealth gap that's injected all this capital into markets and created all these asset bubbles, it doesn't mean we can't expand the M2 money supply, because part of it, is printing money through the Treasury, buying up our debt. The other way is, we can actually have more lending from our banks. That's a whole another way to create supply of money, but in a productive way for the economy. By them giving out business loans, they can spur growth. right? They can grow our economy. That will allow manufacturing to come back. It'll allow us to hire more people and stimulate the job market in a way that's healthy for the economy. And that's a much better way, but much better mechanism for long-term stability for us to, stimulate growth, keep the markets going without crashing the markets. And he said that in that video. He said, there's a way that we can do this without it being, um, unpopular politically, without us hurting markets. And I think that's what they're trying to do here. Now, they've got to do it right though, and I think they need to get the messaging right around this. And that is why the markets are trying to figure this out. Like, what the hell, man? Like, why would you choose this guy who is looked at as a hawk? And I think this is it. And I think this is what they're looking to do or trying to do. And if they can pull it off, man, I have to say, maybe he's not as bullish in the short term as somebody that would come in and just print a bunch of money. But it certainly would be good for Main Street and Wall Street in the longer term. It wouldn't, result in inflation like we've seen, which hurts the normal everyday person that is feeling it, that's living paycheck to paycheck. But it's also, I think, going to be good overall for asset holders as well. And it's something that, if we're going to make a pivot, it's got to happen now. I will say it does feel a little bit like the boomers are kind of closing the door behind them. They, since 2008 till now, they've had crazy inflation. The homes they bought for a freaking bag of potato chips are now worth millions of dollars. They got the benefit of all this easy money. So that part's a little bit frustrating. It sucks that like we're the ones that are going to feel this pain in this pivot. But I think if it's done properly, they can do it in a way that's not going to just crush us. Okay, that can be good. And regardless, there's always going to be opportunities, guys. So I think there is a way that this can happen, and a way that the markets have actually been overreacting from all of this. And that's my bull case in all of this. So we'll see how it plays out. We'll see if we see any comments from Besant, from Warsh in alignment with what I just covered. I certainly hope so. That's the positive side of things. Obviously, the markets have seen the negative side of things. I think we're starting to see a little bit of a bounce, though, now that it's being digested. Okay. You guys see this? I saw this. It's Donald Trump's going to be launching a token today. There's another big extraction coming. I was like, you orange motherfucker, you better not. There's an article here. It says Digital Token Initiative. And I was like, oh, man. Please tell me it's not so. I looked into it, though, to ease people's minds a bit before you all like have an aneurysm. It says that ultimate beneficial owners of at least one whole share of DJT stock, including holders directly registered with the company's transfer agent, will be eligible to receive tokens and associated incentives. And I was like, oh no, not again. But here's the good news. It says that it is further anticipated that the tokens will not be transferable and cannot be exchanged for cash, and that the only ultimate beneficial owners of DJT shares will be able to receive these tokens. And essentially, it just proves that you're a stockholder and gives you access to certain features on their platform. Okay, so, oh man, I like about had a heart attack, and then I read this, and I'm like, okay, thank God. We don't need another one of his meme coins. So this is not something that's expected to be able to be bought, sold, transferred in the open market. It's literally just kind of like an NFT, I guess, in a way that just proves that you are a shareholder. So good news there. The other big news of the day, and then I want to talk about some deep in stuff actually, and a couple critical levels on the charts. Actually, I'm gonna cover that as well. Clarity Act. So this is obviously a big deal, guys. This is what's going to determine what's a security, what's a commodity. This has been years in the works for crypto, something that we really need to get done, frankly. If this does not get done this year, there's a major concern that this might not happen until 2028, 2029 under the next president. Unfortunately, crypto's now become very politicized because Trump has kind of claimed crypto, and now it's become a very partisan issue. So this is really, really important. The big holdup has been under the banking sector, and there's been a fight because they don't want stablecoin issuers to be able to offer yield. That's a problem. And honestly, it's bullshit. Let's be real, because they don't want competition. Our banks are able to buy treasuries, invest in things, get a really good yield, and offer you next to nothing in your bank account and basically collect the spread. They don't want stablecoin issuers to be able to offer higher returns and then have people pull money from their bank accounts and instead go into stablecoins where they get better yield on their money, and would effectively force them to offer higher yields, which would cut into their profits. I mean, that's basically what this is. There are some reports that Jamie Dimon with JP Morgan and Brian Armstrong got into it not too long ago. And today they are meeting in Washington, D.C. The banking sector and the crypto industry leaders are all meeting, trying to get on the same page here, trying to get this done. We already had the ag side of it. So there's the ag side and the banking side that are doing the write-ups. Those write-ups need to be combined, and the Senate will vote on it. If it's approved by the Senate, it's already gone through the House. I believe that if the Senate signs off on it, I think it has to go back to the House because there will be changes made, and that has to be approved, and then it goes to Trump's desk, as long as there's no more changes made. So it was a big deal. I thought this was an interesting write-up, and I have to agree. This guy who's saying, I thought it was next to impossible the Clarity Act would pass, but today I'm changing my view. Big meeting today in D.C. where final policy items will get ironed out. That was the easy part, and trust me, it was not easy. The hard part is the politics. It says, in D.C., a deal is always possible. Depends on where you choose to spend your chips, and I think the administration is prepared to spend them to get crypto market structure over the finish line. What I actually think while I actually think Kevin Warsh, and this is timely, we just talked about him, will be long-term positive for crypto. The crypto markets have not responded favorably yet. Asset prices are down. Being the crypto capital of the planet definitely doesn't feel great. Yeah, no shit. It's felt horrible. So Trump needs to win. There are plenty of political deals and trades on the table. Will he choose crypto? I think so. Midterms are approaching, and a fair shake is deploying. It's well funded. We saw that happen. Last cycle. So still a lot of wood to chop, but I think this now ends up happening. And this is very true. This is a midterm year. I think if Trump doesn't fix things with the crypto community, he's in big trouble. He already might be anyway. But if you look at some of the comments on things about Trump on X, if you look at announcements of his son's crypto company, it's not pretty for him right now, and we've been through a lot of pain. They need to get this done, or in my opinion, it seals the fate of the midterms. And if you look at where we are today, as far as whether or not this is going to get done, we've seen a slight tick up today, nothing major on both it getting done before May and before June, but still, I'd say unlikely. 23% chance on Kalshi that it gets done before May, 34% before June, 54% this year. Okay, so this is going to be something to keep an eye on. We haven't heard any news that I've seen yet as far as how this meeting went today. This is going to be very indicative of how crypto plays out the rest of the year. Let's be real. We haven't had any catalyst in a while. We need a catalyst. I think if we can get some good news out of this, and this thing looks like it's going to get passed and does get passed, and Warsh and Besant come out with some good messaging around how Fed policy is going to look, I think that we could actually see some positive things happen in crypto this year. Without both of those happening, there's definitely concern about where things are headed. I'll be frank. Like, I think long term it'll be fine, but as far as this year goes, these are very, very critical items. And if you take a look at where we are as far as the midterms go, man, 83% chance right now that Democrats are going to take the House. I don't think many people no one really thinks that Senate's in jeopardy, but the House is right now a big problem for the current administration. So they're going to pull out all the stops. I think they really need to get this crypto bill done. Full stop. And this is a really important time right now. And there's two key levels to be paying attention to. And these are, levels that Brandon Hong, this guy has made more money than I know. He's the best trader I know. Has been absolutely on fire over the last year and a half. Absolutely crushing it. He's called all of the major trends. He shorted after inauguration. He made tens of millions of dollars on gold and silver more recently. Called Aster, called Zcash. The guy's been on top of all of it. He does TA, but he's not like a guy that looks at like 50 different patterns. The main thing he looks for are key levels over longer time frames. And this is the key level right here. And we tapped it last night. And this is why this is so critical right now. This is the level we broke to move into the uptrend. This is the level we tapped after the tariff announcement of last April and bounced off of and continued on the trend we are on. And we tapped it last night. If we break below this, and this is where he's at. I mean, he shorted. By the way, he shorted it recently too after we broke down in the mid 90s. Right now, he's actually in longs. Okay, so he says if we break down between 72 to 74 and we break down below that level, we're moving down into probably 60, high 50s. Okay, so that's how important this key level is. And this is what he looks at. He looks at for longer term timeframes, looking back months, years, sometimes. Like that's what he saw with silver. Silver was on a multi-decade trend line that was broken. We've seen this trend line over the long time frame be very, very important. Now, if we break below where we hit on that tariff announcement, we're in bad shape, guys. So as long as we stay above this, we're okay for now. The other big trend line, and this is looking disgusting. This is the altcoin market cap minus the top 10. Okay. That's a nasty head and shoulders pattern, guys. Like we want to hold this. We break below that, we're in a world of pain. So this is right now we're in some, I would say a critical period where if this all breaks into the downside, we probably have a lot more downside ahead. Conventional wisdom. I mean, if you look at Ben Cohen, like you look at the charts from the last market cycle, there's a lot of reasons to make that your base case. Okay, at this point, for me, like I've changed my outlook a little bit because of the Warsh appointment. I don't think it's the end of the world, but it's not what we wanted. So they can thread the needle if the clarity bill gets passed. I think we could see things move back up. But if things don't come together, I think we need to be prepared for more downside. And from there, it really just comes down to, okay, what you have in the market, is that something you're willing to be patient with, hold on to until things turn around, which could be later this year, maybe. Okay, so I think that's something you have to think about. And if you're not in that situation and it's money that you need, you might want to consider cutting positions and waiting for confirmation of a confirmed uptrend, preserve capital in case we see further downside. And that's one thing too. Brandon Hong talks about a lot too. Is like, hey, people are worried about if you cash out and you see things move up, well then you can't buy back in. That's not true. I mean, he doesn't even look at price so much as trends, which is interesting. So he'll like exit trades if he feels like the trend might be breaking down, and sometimes he'll wait for an extended period of time and buy into the same chart at a higher level if there's a breakout occurring. So there's nothing wrong necessarily with preserving capital, waiting for this to play out, because there is some downside risk right now. Okay, but let's talk about some of the deep end projects. And in particular, the ones that I'm really positioned into at this point, knowing full well like what the risks are as far as the overall market. But Silencio had some big news today. They have pivoted, obviously, to collecting voice data for AI training. And guys, they are getting a lot of demand, y'all. And now they're branching out not just into AI voice training, but even emotions. They want to be able to train AI on not just different languages, but reading different emotions within people's speech, which is freaking nuts. And they're introducing a buyback and burn program. If you're an SLC holder, you'll be able to earn more USDC per hour. So giving some extra utility to the token. And they're talking about, they're getting massive interest in data sets that they're collecting and closing contracts weekly. Guys, like these are the opportunities that the market has not priced in yet at all. And I can tell you that because look at the freaking market cap on this thing, dude. We're at $1.68 million. Like the pace they're on right now, they might be 10x that on a monthly basis on their revenue. Okay. That's absurd. And now that they have market buys and burns, y'all, think about this, and obviously nothing's guaranteed, but let's say that, market does rebound. These things come together, and it happens sooner, not the end of this year, but sooner than that. If they are closing contracts like that, and let's say this thing got up to $100 million market cap, which I know it seems like a distant memory, but back in 2024, that would not be unreasonable at all for a project like this that's doing the things they're doing right now. That's like a 64x, I believe. Okay. So to me, the risk reward is really good here right now. And I think that the market just doesn't know. They haven't figured it out yet. So these are the types of opportunities. If you're paying attention, you're looking at the founders, what they're saying, you can find asymmetric trades. And in my opinion, this is one that is very attractive to me right now. Again, keep in mind, we're at a very big inflection point where we could see more downside. So to me, yes, I have a position in this, I'm going to continue adding, but I'm DCAing. I'm not putting all my stable coins in right now. I'm making sure I still have stable coins, a bag of stable coins, and knowing that I might need to be patient here. We have to wait till the end of the year for things to turn around, but I feel very confident that is going much higher in the future. Okay, that's my confidence level in that. 375 AI teased their new app update. Store visits, hexes scan, shelf scans. So hexes, we all know about that. That's been passive in the background. We know that based on some interviews with Harry recently, they're working with some big brands. It looks like you're going to be able to have additional utility in the app to go and check into stores, scan maybe products on shelves in order to earn more tokens. This is something that's going to create revenue streams for them above and beyond what they're doing with the installs of their cameras, which they're continuing as well. They keep posting these. They're installing these things. Again, there's 6 cameras on all of these billboards, NVIDIA chips, processing the data at the edge. Y'all, this is something that's not being talked about enough. I know there's a lot of focus on robotics, on AI agents. The data that's needed to train all these models is going to be so incredibly important and valuable, and in particular, new data sets that haven't existed. This type of data is going to be able to be utilized in so many different ways, and people are going to be willing to pay a lot of money. What do you say? We always compare revenue to market cap. I do. And like Silencio, if they're at 1.6 million market cap, if they're on a $10 million a month run rate, that's incredibly undervalued in my opinion. But actually with stock, you buy a share of the company vehicle. It is maybe a weakness. So I think this is a valid point, not to get sidetracked, because when you own a share, you actually do have ownership in the company of investor protections. If that company were to be acquired, you'd get value in that acquisition. If they went bankrupt, there's a chance you get paid out. In many cases, shareholders are one of the last people to get paid out in a bankruptcy situation, but there are certain protections there. The other end of the spectrum, though, I would say, is that with open market buys and burns, um, you're effectively, investing in a company that the equivalent in the stock market would be that they're doing stock buybacks in the early stages of a company, which doesn't happen. So there's not a perfect comparison between TradFi and DeepIn tokens. But those are things you should be aware of for sure. We're kind of, writing the script as we go as far as how to value these projects. But, we haven't, and this is the first time in the last year or two that we're seeing like really meaningful revenue coming into these projects. And really in crypto in general, guys, like you look at L1s that are sitting in like billions, hundreds of billions, like a lot of them, aren't necessarily generating a ton of revenue. Let's be real. In fees, they are, but not like meaningful compared to their valuation. And most crypto projects have zero revenue. So this is really DeepIn is in my opinion kind of separating itself from the rest of crypto. What we know about crypto, just not a lot of people know about it yet. And I think it will be attracted to TradFi if we can prove that a valuation model works, and if we can prove that the tokenomics can be sustainable, which we haven't yet, but I think we'll get there. But going back to 375 AI, like this data they're collecting here is going to be very valuable. They're leveraging the app in different ways. The main guy they have building their app has built other apps that have had millions of downloads, generated millions in revenue. So they've constructed this team. It's really Harry's like guys that he's worked with throughout his career that are the top performers, that they've constructed this team that really they all bring different skill sets to the project that I think they're going to do really well, man. And you look at their market cap, absolutely beat down. I mean, a little bit up today, but dude, $3.12 million. Like, give me a break. That is insane. And a lot of this, I think, that it was being driven down. I wonder if this is still happening. Let's look at the markets real quick. Yeah, this Bitmart has been, there's got to be somebody wash trading this or something, because is over 600,000 daily in volume. But the liquidity is really low there. There's something weird happening there that some market maker, somebody is like wash trading tokens there, and they've been driving the price down. And there hasn't really been any buyers yet, because I just don't, it's such an early stage project that people aren't aware of what they're doing. They don't understand the team behind this thing. Y'all, to me, this is such, I can't wait to look back at this stuff when the market rebounds, man. 375 AI is like one of the biggest no-brainers, and they have a lot of listings. So when people want to come in and start buying this, they're going to have easy access to it. So, man, no-brainer in my opinion. GeoNet, they've got their AMA on Wednesday. So make sure to pay attention to that. And I'm going to be giving that a listen for sure. They continue to crush it, obviously. If you haven't watched my interview that I recently did with Mike, you should check it out. They're doing a lot of cool stuff, especially with drones. We're cutting off DJI drones from China effectively, so they're getting the drone space. They're gonna have an American-made drone that has GeoNet RTK compatibility built in. And I've been in the drone space. I got to tell you, using RTK technology has been a pain in the ass. You generally have to put down a base station, triangulate the position. It's a nightmare. That's all I have to say. So being able to have that integrated into the drone is going to be a game changer. Sitting at $61.2 million market cap, projected to hit like 20 million this year. So that'd be 3-to-1 on the market cap to revenue. But they are burning aggressively. 80% of revenue going to market burns, token burns, and open market buys. And they've already burned, let's see, we're at 976. So to call it 24 million. So 2.4 million of their supply, 2.35 million of their total supply has been burned forever. Okay, so gone out forever. That's going to continue happening. They've got a halving event at the end of June as well. They do have some unlocks to the team this year, so quite a bit unlocking this year. But they are a team that, knowing Mike and knowing their team, I am not concerned about them with any mass sell-offs or anything at all. And in fact, out of all the teams out there, I have most confidence in them in regards to that. I can't say the same about all the other teams out there. but at least the ones I'm looking at, that's not a concern. Aoki, third store in the U.S., set up by themselves. So they've this is their cactus products. This is helping stores be more efficient with product placement on their shelves. It's helping them become more efficient with their employees and directing them on their day-to-day jobs. They are still in price discovery, but more recently they signed a contract that's $500 per location. And this is a huge customer of theirs that they're in a paid pilot, by the way, and it could be their first 8-figure client. So the big thing with Aoki is by summer, probably sooner, they are expected to be profitable. In other words, they'll have more revenue coming in than their burn rate. That's a big deal for a startup, man. And that means that their product is going to keep them afloat already. And they've got massive contracts potentially coming in later this year. That's a big deal, especially right now in these conditions where you don't necessarily want a project that is running up against their funding and having to raise capital to stay afloat right now. Raising capital in this space, especially after October 10th, and what we've seen in crypto, is only going to get harder. So having a project like Aoki that can be self-sustained on their own revenue is a big deal. And I would argue at its current price point, you're looking at 19 million. In my interview with Nils recently, I mean, they can get easily to 20 million by June in ARR. So that'd be a 1-to-1 and from revenue to market cap. They believe the bull case and what's in sight potentially by the end of the year is as much as 100 million in revenue. I would say that's an outside chance, but it is in the realm of possibilities based on their pipeline currently, which is freaking nuts. So again, these are the heavy discount bargain bin prices that we're looking at right now while no one wants to invest. And certainly there's definitely still uncertainty, guys. Like I showed you in the charts, there's still potential downside, but if we rebound, we might not see these prices again for a long time, but DCA is the way. Make sure to manage risk. Don't overexpose yourself, and do your research. And it really depends on your personal circumstances, guys, on what to allocate to these projects if you decide to. But I like to be transparent about what I'm invested in. And I've cut other positions. I've been open about that. And certainly when the market gets overheated, as we get back to greed again, which hasn't happened in a long time, but when it does happen, I'll be taking profits. Okay. So I'll be very transparent about that as well. Doesn't mean you don't believe in a project, guys. People will tell you if you sell, you're an idiot. I took some profit in 2024. I wish I had taken a lot more. I'll be honest. I think most people feel that way. Most people weren't up that much in 2024. I was positioned in all the right stuff. I got to say that much. I did well, for sure. Could have done a lot better. But what we have to realize is in any markets, Warren Buffett even says, like, hey, be fearful when others are greedy and greedy when others are fearful. Berkshire Hathaway is sitting on like hundreds of billions of dollars of cash. No one's like, Warren Buffett, I can't believe he sold his stock and is rug pulling people. It's like, no, bro, he realized that shit's overvalued, so he moved into cash. Warren Buffett's not rug pulling people. So if you take profits in this space, it doesn't mean you don't believe in a project. This is still a very nascent industry. Things get undervalued, like we're seeing here, but they get overvalued as well. And one of the good things about crypto and why there's so much asymmetric upside is because of the volatility and the fact that there are market inefficiencies and things get overvalued and undervalued, and that's you have to play that. I wish I had learned that sooner, but we're learning new stuff every day, man. I read so many macro books last year and studied market psychology so much. So always learning, always sharing my learnings with you guys, and appreciate you guys being here for the journey. But very excited about where we're headed. Short term, we'll see how it plays out, man. I think as the market digests Warsh, I don't think it's going to be the end of the world. I would expect we'll see some announcements out of him or Besson in smoothing things over. We've actually already seen some reports, by the way, out of like Jamie Dimon and some of the other people in the financial sector saying they don't expect any major shifts in Fed policy anytime soon. Even with Warsh taking over, they're like, we don't expect them to have any drastic changes. I think it's going to be more so like outlining a plan over time that doesn't wreck markets, that will get us in a better place in the long term. I really do feel like that's how this is going to play out. And we'll see. We shall see. What else have we got in here? We got probably the best way to evaluate compared to L1s now. And like you said, we need to find a way to evaluate and get there step by step. Maybe reevaluate the measures we use frequently. 100%. I think DePIN is going to have a different valuation system than anything else in crypto, though, and it should. These are actual businesses. I mean, these are startups where normally like in the privatized space, like startups, you get a salary, they raise funds, they've got a board that holds you accountable. Most of the time, the board has no freaking idea what they're talking about, but they just have numbers they throw out that they want you to hit, and generally they're like unreasonable. And then, that's from the top down. The CEO will say, "Hey, these are the numbers we need to hit because that's what the board wants." And then your boss is like, "Here's the number you need to hit in the sales, in sales." And you're like, "Okay, that's not even possible." And they're like, "Well, we don't care. That's what the board wants." That's generally how it works. And then, you have your salary, you have your commissions, everyone gets paid, and then you have equity. So if it ever goes public, you get paid out. It's a little bit different, right? In this space where these are startups, but as opposed to the token adds a whole different aspect to it, obviously, right? Like the value transfer is very much in the token. They're still a separate business entity though, right? Too, where they are, you look at like GeoNet, 80% of their revenue is going to open market buys and burns. That's all. 80% of their revenue is going to token utility. The other 20%, they got to keep the lights on. They got to run a business. So that's where like the complexity comes with these different protocols. I don't think a lot of people realize that you're balancing a lot. 80% is very aggressive, for them to be putting all that towards the token. And that's one of the reasons I really like what they're doing. Like they've done everything the right way. And with that much of the revenue going to the token and the growth they're seeing, I think GeoNet has such a bright future. I really do. And I think we're going to see other projects kind of follow on their footsteps with similar tokenomics to correct some of the things we've seen with other projects. Not naming them, but you guys know the ones that I've cut positions from recently that kind of had their big moment and their charts are seemingly going to zero. I think they'll bounce back, but I just don't think there's as much upside as the ones I just covered. Silencio, 375 AI, GeoNet, Aoki, I'll throw a rover in there as well. Anyway, with that said, guys, I appreciate you all. Hopefully you liked the session. Make sure to like, share on X, follow me on YouTube if you don't already. I started going to Rumble a little bit too, just because I don't think, Rumble is just another platform. They're never going to deplatform me. I know YouTube's deplatformed a lot of crypto people. I don't know why over the last year without any rhyme or reason. So just trying to branch out a little bit more. Oh, tomorrow, I meant to bring this up. We're going to have a roundtable on our space tomorrow. I'll probably be like mid-drive back to Chicago. And it's going to be about some of the stuff we just talked about. We're going to get some thoughts from everybody on whether or not the Warsh decision was an overreaction by markets with the sell-off of the weekend. Is the bottom in? Have we changed our thesis and our projections for this year and where DePIN can go and the crypto markets can go and what are the ramifications of all this? So we're going to, and not just my thoughts, which I shared a lot of today, but we're going to get everyone else's thoughts as well. So should be an interesting session, I think. That'll be tomorrow at 11. Again, we have that every week. And man, what's kind of crazy? I got a response from Trueflation. So Trueflation is a lot of people post about them. Like they use real-time metrics to measure inflation. Obviously the government uses CPI and they use like super outdated metrics and like survey data that the response rate's horrible. It's like ridiculous, the archaic shit they use to like drive policy. It's insane. But Trueflation responded to me and they're like, hey, we would like to get our CEO on one of your podcasts. I'm like, hell yeah, let's get the Trueflation CEO on there. So maybe we'll have him on at some point. We'll see. But I'll keep you all posted on that. With that said, y'all have a fantastic Monday, and I'll be back in my normal setting tomorrow. Peace.